We have Halima Adediran now, senior analyst at Financial Derivatives Company. Great to have you on the show. Halima, yeah, so we're seeing gold, that massive run from 2025, that's continuing in 2026. What's really driving investors to buy right now? Is it mostly the uncertainty around the U.S. Fed? We know there's so much drama going on between the U.S. Fed and President Donald Trump right now.
Yes, so thank you for asking. We'll see the price of gold historical. If we set it back to what we see in like a year or 2 years before now. But currently, what is actually driving it is expectation and so many uncertainties in the financial market. We all know that gold is non-interest yielding commodities, but is majorly used as a hedge whenever there is financial uncertainty in the global financial market. And so like what we are seeing right now in the financial market, where the independence of the US Fed is being threatened, given the issue between the US Fed chair and the US president. So the market is trying to look at what could be the possible outcome of this tension, which could mean a reduced independence of the US Fed as a whole, which could mean that rather than we seeing a data-driven inflation interest rate shift, we could see a more of direction or as regards what the interest rate direction should be. So that is one reason why we are seeing a surge. So people are moving towards the gold because it's a safe haven, and we will see that there's an inverse relationship between gold and interest rates. So that is number one. Then another thing is because the US stock and even the US dollar is under pressure. We'll see that for like 3 or 4 months before now, we are seeing the US dollar trading downwards when we compare it with baskets of other currencies. And so this is given a signal to global investors that this could linger for so long, coupled with the fact that there are so many data that are not yet, economic data that are not yet released in the US because of the government shutdown some few months back. And so it's not really giving investors the actual picture of what the economy could look like and the performance of the economy. And so we are seeing a shift towards holding gold and being a safe haven rather than just investing in the uncertainty as regards the stock market. And we know that the US dollar too is also traded as a commodity. So the market is expecting that it could decline further against basket of currency. So that's why we are seeing people holding gold much more than tilting towards the bond, the equities market, and even the currency market.
With gold at these levels, it looks like, investors and countries that actually hold or trade gold, it seems most of them are cashing out at this point. What do you think could be that headwind for gold, in 2026? Or is it just going to keep blasting up? Nothing goes up forever.
Apart from the fact that countries of the world are trading gold, we'll say that the retailing end of gold, so meaning the consumers at the individual level, is becoming high when it comes to the acquisition, the holding of gold compared to savings, compared to buying stocks, even here in the local market. So it's gaining more grants globally, nationally, and even on household levels too. We are seeing more interest in terms of investing in gold, so which is increasing the demand aggregately and is feeding on the price. That's why we are seeing a surge. So, and there's an expectation that the price will continue to increase, given the reasons I've already explained, the expectation of lower US interest rates, giving less independence of the Fed, given that even the US government is more of a low interest rate advocate, because he believes it will increase economic growth. So expectation of investors as regards other factors that could help the economy thrive, they're saying that it's tilting towards favoring gold. So in all, that's why we are seeing that surge in the gold price. So it's going to continue. It's very likely to continue into first quarter of 2026.
And I'm wondering if all of the geopolitical tension, suddenly ends and we see some kind of certainty, around the global economy, maybe that could be a negative for the safe haven asset, at this point. But what's playing out with other, global commodities at this time? What interesting trends are you seeing?
Okay, so for Brent, what interests me the most, especially in the past few months, is that we are seeing sensitivity, especially in the Brent price, and this is driven by global headline and global news much more than the actual data. So the perceived fear as regards what is happening, for instance, now the current tension in Iran is making the investors expecting an increase in the price of Brent in the coming weeks. So that's why we see like a surge in the price of Brent currently. And so it is the other way around before now. What we usually see is expectation of supply glut, expectation of increase in demand, but now we are seeing that geopolitical tension and even news headline, global headline, is feeding into the price of commodities much more than the actual demand and supply swing or change. And this will have so many knock-on effects on not only currencies, it will have on inflation, it will have on so many other economic data. For instance, now, if the Iran tension continues or lingers for more than we expected, we will say that it will filter into export disruption, because Iran is one of OPEC's highest exporter of crude oil, and that will even cause cost-push inflation for importing countries, and even import bills could rise. So basically, what we used to have is demand and supply trend affecting or dictating the price of a commodity, but now we are seeing more of expectation, global headlines, and even news driving the price much more than what the actual production is.
All right, definitely a lot to unpack there, but let's bring it down to the domestic commodities at this point. What's the trend there? Are consumers, getting some kind of break?
I think so. From our market survey, that is what I could deduce, because most of the prices of the local commodities are flat. I think it's only beans that traded downwards a bit. So, and that's because of its ample supply. For now, I think it's in season, so it's helping the price to really move downwards compared to what we had in the last 6 months before now. So, but I think people have already shopped the festive period. They've stocked their homes to a reasonable extent. So buying is not as much or as large as what we had in the festive period. That is last month. So I think people are taking a break from buying now. So it's kind of helping the pressure that we are expected, or we hope to see in the prices of domestic commodities.
All right, so definitely. I'm all for looking out for data, showing the state of, the Nigerian consumer. Hopefully we can get that, to really gauge how consumers are faring at this point. But thank you so much. We'll definitely unpack more on what's playing out with those commodity markets. Thank you, Halima Adediran, analyst, Financial Derivatives Company. Thank you.
Thank you for having me.